Hey everyone, we're back again with another week of Forex trading. So, just to kick things off, yesterday was quite boring in the market. No real moves or anything like that happened. But today we got a couple of news events coming up, so it will be interesting. So, let's just kick off with the dollar. So, on your overall outlook for the dollar, from last week, we look like we were in a downtrend where we had a move from the top of this channel towards the downside, and price has just basically found support somewhere here around this demand zone. And at the moment it's not too clear on what's happening with the dollar, right? Just to kick things off, firstly, you can see that we had this very long week here. This actually happened yesterday when the market opened. There was this week, and what this means on a forex chart, or rather any chart, it means that there was a lot of liquidity in the zone, meaning that people who were holding sales had placed stops around this area right here. And by the fact that this wick is so long and the body of this candle is so small, it means that a lot of stop losses were met, right? But now, instead of the price continuing to the downside, it looks like it could be forming some sort of reversal, and that reversal looks like it could be the price trying to find its way back into this intermediate uptrend right here, something like this, right? So for my analysis, I was more banking on the dollar continuing to the downside, right? Since it's not too clear now what might happen, I'm not really gonna be interested in taking any USD corresponding pairs, because as you can see, the price, when it broke down here, it gave a correction. So we had a drop, we had a correction, we had a drop. Now this was looking like a correction was forming, but this correction, instead of breaking to the downside, it has now broken to the upside and is now forming a smaller time frame correction, as you can see on the 15-minute chart. So with that being said, up until the dollar shows us some clear intention, and what I mean by that, as you can see, that this is a lower time frame correction after a bullish impulse to the upside. So for my analysis, it's not really going with what I wanted. But for people who are going to be more bullish on dollar and things like that, you could look at this as a push to the upside correction, continue to break, but only once the dollar breaks above this key zone right here will you then be looking keen to take corresponding USD pair trades. So what do I mean when I say that? If we just look at Euro USD, for example, so Euro USD from last week was pushing all the way to the upside, and then price had formed this correction structure such and such. So we expected Euro USD to basically complete the pattern. Now, because the dollar is doing its mysterious moves, it's kind of pushing to the downside. There could be still a possibility for the price to bounce off the zone and then continue, but since the dollar is not too clear, it's not really wise to take such and such trades. GEU, I'm interested in GEU. If the dollar is going to continue pushing to the upside, I am interested in GEU pushing back into this chart pattern right here. So as you can see, GBP USD from last week, we had this head and shoulder formation, which we caught some sales. We had this head and shoulder formation right here, which we caught this move to the bottom, and then price was retracing, right? But if you look at this movement, this looks like a larger head and shoulder formation forming, right? Meaning, if you look at this, this looks like the shoulder, this looks like the head, and this looks like the possible next shoulder that's forming, right? As I noted, the GU on the weekly time frame was back in its correction structure. So it's very possible that we could still have this move As I said, it's just gonna depend what the dollar does, because at the moment now the dollar is more neutral than anything. Gold is for me a no-go zone, and the basis of this is if we just look at our 200 moving average. So 200 moving average, we don't really use it as a guideline for taking trades, more as it responds what the market is doing. And 200 moving average, once the 200 moving average starts moving between the candles, you then know that you are in a trading range, right? So when you're in a trading range, especially when you're in the middle of the trading range, it's not really good to take any trade such and such. So for gold, for me, is a no-go zone up until it decides whether it's breaking to the upside of this wedge formation structure, or whether it's breaking to the downside of this wedge formation structure. Okay. Euro JPY from last week, we ended up catching a monster bid trade. Now currently the price hit this previous resistance zone, failed to break above. The price is now forming some sort of correctional structure. This correctional structure is bearish in nature. Although for me, I will not really be interested in taking any trades that are moving to the downside. I will more be favoring trades that are to the upside. So yeah, not really much happening today. We'll have to see after the news reports if that doesn't motivate the market to move one way or the other.